Hi, everyone. This is Sandy Sills, a licensed realtor here in Central Florida. We're going to do a share screen here. Okay, so on Tuesdays, we're going to be doing everything about buying a home. And then on Thursdays, we're going to be doing everything about selling a home because we work with buyers and we work with sellers. Tonight, we're going to be talking about how to stop paying rent and own your own home, right? And that's a big one. So this tonight is going to be mostly for first-time home buyers who are looking to buy a home, but they're paying rent right now. And I'm going to say if you're paying more than $1,500 a month in rent, you might be able to buy a home and still pay that same amount. If you're paying $1,800, $2,000 or up in rent, you probably would be able to buy your own home. And there's two ways we're going to go about that. We're going to look into rent with option to buy, and we're going to look into just buying straight up because you have two different ways. We do provide credit repair. We have a company that we work with that is very fantastic in helping you with your credit. We also work with several builders as well that will give you down payment and closing cost assistance. And we also have several lenders that now are all doing the down payment assistance program. So if you go with the down payment assistance program, then you only have to come up with your closing costs. And in some cases, we're even able to find you assistance with the closing costs as well. So once you have your down payment and your closing costs ready, then obviously you could buy a home, right? You could buy a home or a townhome or a condo, something like that. So let's talk about how to stop paying rent and own your own home, right? The landlord loves to hear you say, "Oh, I'll never buy a home," because you're paying their mortgage, right? And there are times when you have to rent. It could be family related. You don't have enough money. There's credit issues, all that stuff. So what we do, we try to help you to realize how soon or how quickly you could actually buy. Sometimes you could buy sooner than you think, right? And especially if you have children, every mom's or every parent's dream is to be able to give their kids a home, right? Their own home, like they have their own room, and this is our family home. So this is a great deal, right? So we definitely help people with that, and we would like for you to give us a call, send us a text, and we will show you how, even if you can't buy right now, you might be able to buy within 6 months to a year, right? And interest rate right now is really, really low, really low. So you may want to take advantage of that. What does that mean? It means that a home that, let's say you were to buy a home for $300,000, and if interest rates were higher, you're paying like $2,400 a month in mortgage. Well, with interest rate being so low, that same $300,000 home, you might only be paying $1,200 or $1,300 a month in mortgage, right? And a lot of people are scared of mortgages, like, oh, I don't know if I want to have that mortgage. But what you have to understand is as long as your monthly payment is affordable, it's just like paying rent, right? Because no matter where you live, you have to pay someone or something, right? So owning a home, you own your own home, you're paying your mortgage, it would just be like paying rent. But however, when you own your home and you're paying mortgage, the house is building equity in it. And also, within no time, you're going to have equity. So this equity could stay in the house, you keep building equity. And this could actually be money that you could save to send your children to college, right? So you buy a house now, your child is maybe under 10 or whatever they are. By the time they get to 18 and college, the house don't build that much equity, right? That's one thing. Another thing is if you want to become an investor, once you buy your first home and you start building equity, you could always pull the equity and buy a second home. Or you could buy a home now. It may not be the ideal home, but after 3 to 5 years from now, you could sell that home and buy a bigger home, right? People do that all the time. So that's kind of what we do. So we don't want you to pay too much money to your landlord. We want you to stop paying rent and look into the how to own a home. We have a huge website called Central Florida Real Estate.info, Central Florida Real Estate.info, that give you a wide range of information about how to find, how to finance your home, how to find down payment assistance and closing cost assistance, and that kind of thing. And taxes are coming up. You might be able to use your tax returns for down payment or closing costs. You never know. Okay. So it doesn't matter how long you've been renting or how insurmountable your financial situation may seem. The truth is there are some little known facts that can help you get over the hump and transfer your status from renter to homeowner. With this information, you will begin to see how you can really save for a down payment, stop lining your landlord's pocket, and stop wasting thousands of dollars on rent. There are many important issues you should be aware of that affect you as a renter. Why on earth would you continue to lose thousands by throwing it away on rent when, with your agent, you could take a few minutes to discuss your specific need so that you can stop renting and start owning, right? So the conversation costs nothing, guys. I'm going to go down a few lists of stuff. The conversations cost nothing. So if you're renting right now and you're like, you know what, I want to examine what would how would I go about buying a home? Like my credit score is 520, and I'm living paycheck to paycheck. Like how can I possibly buy a home? And I'm going to let you know that it is possible because I've been there, done that. That's why I know, right? I know what it is like to be taken from nothing and then buying something. So I'm going to show you how you too can buy your own home. And you just need to start off with one home. You don't need to be an investor and have 10 homes. You could eventually get there, but start off with one. And another thing I'm going to say is it is better for you to own your own home, even if it's not as big as you want it to be, but it's yours. Because years from now, you could sell it and buy your own, right? I'm repeating myself, but I really want you to understand that, right? So you could buy, let's say you're renting a 2,500 square feet home right now, you're paying $3,500 a month for renting this particular home, right? What if you were to buy a smaller home, let's say 1,700 square feet, paying less rent than what you're paying? It's your own home, and then you could build your equity from there and then actually go buy the one you're living in paying all that rent for, right? So that's kind of the mindset that we want to have, right? So let's look at a little bit of known facts that can help you buy your first home. You can buy a home with much less than you think, and we just finished discussing that. If you qualify for a new construction home, right? Let's say you qualify for 250 or more, right? Whatever you qualify for. If that qualification has to do with new construction homes, once you use the builder's preferred lender, the builder will pay most of your closing costs. Most builders are going to do that. You can also negotiate with them to pay more. There are also some builders that will build and they throw all kind of incentives in. So for a new construction home, you might get granite, 42-inch cabinets, and all your appliances included for that one price. So you don't have to go and find appliances. And when you move in a home that's completely new, there's nothing more you could ask from that because you also have warranty. Now, there's some homeowners that will be willing to help you with your closing costs, but we're in a very aggressive market right now. This is January 2021. And even though COVID is on the rise, we're in a very aggressive market. So some sellers won't want to help you to pay, won't want to assist in closing costs, but we could still get that. No matter what the market is, there's always someone that's willing to help, right? So if we gave them their full asking price and then ask them to give us 3% back or have the 3% on top of the purchase price, that might help you with your closing costs, okay? You may be able to get your lender to help you with your down payment and closing costs, which is another thing. Next week, Tuesday, I'm going to have a lender on with me. He specializes in down payment assistance. He has a grant program and he has another program. So that will help you in your down payment assistance. He also has a program for frontline workers. So if you're a nurse, even teachers, cops, doctors, anything to do with healthcare or teaching, they have a special program going on right now as well because of COVID to thank the frontline workers. They're giving some incentives if you're looking to buy a home with that as well. So his name is Dave, and Dave will be on next week to discuss down payment assistance, closing cost assistance, and all the stuff that he does. Now, if you qualify for a USDA mortgage, you don't need a down payment, right? So if you're buying a brand new construction home in an area that qualifies for USDA and you qualify for a USDA mortgage and the builder is paid most of your closing costs, that's like you hardly need anything. Now, with USDA mortgage, you have to have a credit score, I would say, of 660. Some people say 640, but I would say 660. And USDA is very specific in your debt to income ratio. So they pay very close attention to how much money you make and what your expenses are based upon what's being reported on your credit report. So it's a little bit of a difficult loan to qualify for, but if you qualify for it, you'll be able to buy a home with no money down and the builder paid most of your closing costs. So there you go, right? Perfect, perfect, perfect. But Dave is going to be taking us through next week on the different programs that they have available for down payment assistance. And also, if you're a VA, you know, the VA, if you're doing a VA loan, you don't need any down payment, but you'd have to have been in the military to be a VA, right? So that may not work for everyone. All right. You may be able to find a seller to help you buy and finance your home. So it's not normal for a seller to finance homes nowadays. Most of the time they just want to sell it. But there are a few corporations that if you buy the home, if they're selling the home, they will finance. Some of the foreclosure banks also provide financing when you're buying the home. There are some sellers that own their home outright and they will allow you to put a down payment with them and they will carry a mortgage. But in that situation, the interest rates are normally a little bit higher than normal, but that's something you could do. For number three, the thing I'm going to suggest is rent with option to buy. We have a company that we work with, and what they do is they'll buy any home that's active on the market for sale. So any home that's listed on Zillow, Realtor.com, MLS, any home that's available for sale, they'll buy it. They do have a cushion on the price for the home. I think it's 350 is the max. The area, it depends by the area, right? So based upon the area you're in, and they'll rent you back the house up to 5 years, but you renew every year, so you're not stuck in a 5-year lease. So if you go out and say, hey, I like that house, the company will go out, they'll buy the house for you, and then they'll rent it back to you with the option to buy. They will give you a schedule of how much rent you'll be paying for every year for the five years that you're renting from them. If at the end of any lease term, because they're going to give you a 1-year lease for 5 years, right? So year one, when you finish that lease, they're going to renew it. Then year two, after 5 years, you're going to have to either buy or move. They're not going to allow you to live in it for more than 5 years. You could cancel the lease at any time. So if at the end of year one, you're like, you know what, I really don't like this house, I don't want to buy it, I want to move. As long as you're at the end of the lease term for that year, they'll let you out, and you could buy the house at any time. And they show you how much they'll sell the house to you for at each year. So if you buy it at year one, we'll sell it to you at this price. Year two, this price. Year three, up to the 5 years. So at each step of the way, you know how much you'd pay for the house if you intend to buy it from them. And if each step of the way, you could also cancel your lease as long as you're at the end of your term. So every year they're going to renew it for you up to 5 years. So that rent with option to buy program is a great program because it's not just house for sale for rent, it's also for sale. Also, I think they have a limit on the HOA. The HOA can't be more than $200 a month, and the HOA must allow renters in that development. So there's a few stipulations, but it definitely works. It's available here in Florida. I know it's not available in New York, but the rent with option to buy program is a great program to get you started. So if you started off doing a rent with option to buy, you could either buy that house or you could buy something else. Okay, so you're not stuck with that, but you have to wait for the end of your term. Otherwise, you're gonna have to pay like any other rental program, you would have to pay a termination fee if you terminate before the end of the year. But each year, you could either renew the lease or not renew the lease, and you could buy the property at any point in time. Your lease doesn't have to end. So if you started renting and you finish year one, and now you're in year two, and let's say you're 6 months into year two and you decide I want to buy the house now, you could buy it at that time. Okay. You may be able to create a cash down payment without actually getting into debt by borrowing money for a certain investment. So you know how some people have 401k and different investments that they save in. You could also borrow against your 401k or any other investment program that you have to purchase a home. You could buy a home even if you have problems with your credit rating. So again, remember I told you we do work with a credit card repair company. I think it's $84 per month, and there's no obligation. So you pay $84 per month. They help you with your credit. Once you get to the score you want, you could stop paying. You don't have to continue. But it's a great program because it also offers you financial advice, financial education, how to save. They provide a will for you, how to build equity faster, how to save, how to have different savings account. They also give you a bank deposit box, and there's a lot of different things that goes with the program. But if after you build your credit to the certain number, 660 or above, I always say, you don't have to keep using them. Okay. Now we spoke about USD and the fact that you needed a credit score of at least 660, 660, 640 for some, but 660 or above. You could also do a FHA mortgage. With an FHA mortgage, you only have to come up with 3.5% of the down payment. So if you did a down payment assistance program, they will help you with that 3.5%, right? Now, as far as closing costs go, if you're buying from a builder and you're using FHA, you could come up with your own, and you could come up with your own down payment. Then the builder would pay your closing costs. So let's do the math. Let's say we're buying a house for 250. 3.5% of 250 is, I am going to use my handy dandy calculator because I don't want to be live and saying things that's not true, and then people telling me all kind of things on my video that you should check what you're saying on your video. So let's see what it is. So we're buying a house for 250,000 for an example, times 3.5%. So you'd need $8,750. So if you came up with $8,750, then the builder will pay some or most of your closing costs. So that wouldn't be a bad thing. If you're buying a house for the same 250 and you are getting your down payment assistance, and we could have the seller contribute 3% of your closing costs, you probably will be able to walk away to buy that house with maybe about $4,000 in hand. Because if the seller paid 3%, then you might need to pay another 1% or so of the purchase price, and then the closing cost, your down payment assistant will help with your down payment. So that could also work as well. Now, the down payment assistance program do take some time, takes 45 to 60 days. But if at the end of that time you're going to have your own home, then who cares, right? That's what I say. Who cares, right? All right, so let's talk about our pre-approval letter. In the quest of going to get a home or getting ready to buy a home, the one thing I always say is be sure, let's talk to a lender first. We don't want to go to karma.com or which is karma.com is great too, but you want to go to a lender. And the reason being, when they pull your credit, okay, assuming you're not ready to buy, you just want to see what's going on with your credit. When they pull your credit, they could tell you exactly what you need to do to get your credit to where you need to get it to. So they could look at your credit report and tell you what to pay down, what to get off of your credit, all that stuff you need to do to get qualified. A lot of times, sometimes people go to creditkarma.com and they see stuff on their credit and they just start trying to get rid of all of them or trying to get rid of as much as possible. And then when they end up at the lender was like, instead of getting rid of this, you should have really gotten rid of that, because that's really what's hurting your credit. So it's important for you to speak to a lender before once you're thinking about buying a home, before you do anything else, because they could pull a full credit report and they'll show you what items are killing your score. And of course, you want to address everything in your credit report, but there are certain things that if you address those first, it will get you faster to be qualified to buy a home. So you definitely want to speak to a lender, definitely want to speak to a real estate agent. Why do I want to speak to a real estate agent? I'm not ready to buy a house yet, because that's all a lot of people think. A real estate agent like myself has vast knowledge in the home buying department, and I know not all real estate agents are created equal, just like not all doctors or nurses or any profession. You have the good, the bad, and the indifference, right? So you want to get a real estate agent that's very educated in the real estate market, and you want to talk to them about what are you looking to do, what are your goals, what kind of time frame you want to work in, and all this type of stuff. And then that realtor will probably help you to find a good lender and you speak with the lender, tell them the same thing. The lender is going to go over what your income is, what your expenses are, what does your credit report look like right now, how can we improve your credit score and get it as high as possible, so that by the time you're ready to buy a home, everything is ready to go and you're not worried about nothing. Like what some people do, they'll be like, okay, I think I should buy a house. Yeah, I should buy a house. But I don't want to buy a house for more than 200,000. This is just an example, right? So they go out and they start looking at those houses. And then when they find a house they like, and then they got to get pre-approved, and it's time for pre-approval, they realize they either can't buy because their credit is not where it used to be, or instead of buying one for 200, they could really afford 150 as an example. And this becomes very, very disappointing. And the most disappointing part about it is if you went to see a home that's more expensive than what you can afford, because you'll always compare the more expensive homes to the least expensive homes, and the least expensive homes will never be able to live up to the more expensive home, right? So that's something that you got to keep in mind for sure. So that's why it's important that you prep yourself, give yourself enough prepping or enough prep work, so that by the time you're ready to buy the home, you have all your ducks in a row. You work on your credit, you know what you want, what items you wanted to get rid of, or what items you wanted to pay off on your credit report, and all that great stuff. Another thing in buying a home is if you have a car payment that you could refinance, like if you have a car making car payment and it's high and you could refinance it right now because the interest rates are so low, that's also a good idea. Another thing is if you're thinking of buying a car and you didn't buy the car yet, you might want to hold off on buying the car and actually um, buy a home first, right? You could, if you have a car that you're already using, that you know you want to buy a new car and it's kind of getting there, but it's not completely there yet, then I would definitely buy investigate into buying a house first and then buying a car later on, right? And you're like, well, I only have money for one. Not necessarily, not necessarily, because based upon the help that you could get with down payment and closing cost assistance, you might not be able to come up with a lot. And once you buy the house, then you could always go finance the car. But what happens is a lot of time when you're a first time home buyer and you already have a car payment on your credit, unless your credit is super good and you have a super high score, that always plays a part. Car payments and student loans always play a part. The one thing I could say about student loans are try to keep your student loan current, because if you're anyway behind on your student loan, that's going to play a big part in getting a mortgage. Okay, so you're going to have to bring it current and keep it current. That's going to be important. Another thing that they look for is you want to make sure that you're in a steady job and that you had your job for over the last 2 years. And if you didn't have your job for over the last 2 years, you want to make sure you're in the same field, right? So maybe you were a nurse and you're working at X hospital, but then you left X hospital and you went to Y hospital. That's fine because you're in the same field. What they don't want to see is they don't want to see you jumping job to job to job to job, and they don't want to see that you don't have um, a good work history, right? And there's a program coming out, and it may be out already. I'm not sure. I know it was coming out towards the end of last year, where they were going to use your rent payment as part of your credit report. So if you were paying your rent on time, they would use that as part of your credit report so that your credit score would be higher. I'm not sure if they started the program yet, but that's something that they're about to launch, and I think it's so awesome because a lot of people they pay their rent on time. Sometimes you just don't have enough money to pay the rent and to save to buy a home, right? So if they could use your rental income or your rental payment as part of your credit history and you could build your score, then you could qualify for down payment assistance or any of that great stuff. I want to show you our website that we have developed that you could get all kinds of real estate information on. Okay, it's Central Florida Real Estate.info, Central Florida Real Estate.info, and it provides a whole launch of different topics that you could look at. Look, we have a whole launch of stuff for buyers, we have for sellers, we have our general stuff where we send it to our regular newsletter, because the home buying process takes time, guys, and sometimes it takes a while for us to get to the goal point, right? It might take so for some people they're like, okay, I'm ready to buy a home, I could do it now, they do it. For some people it takes 3 months, for some people it takes 6 months, for some people it takes a year, for some people it takes 2, 3, 4 years, right? It takes time to get your stuff together. You may have to work on your credit, you may have to save some money for your down payment, all that great stuff. But once you start on the path, we would like to help you, whether it's going to take you 3 months, 6 months, a year, 2 years, 3 years. We want to be there with you to help you, to guide you while you're building your credit. You could use our credit repair company. You could give us a call. Hey, I'm thinking of doing this. Do you think that's going to affect my credit? We have our lenders that you could talk to. Once you're like, okay, I want to buy a house next year, I want to buy a house in 6 months, or I want to buy a house in the next 2 years, they could guide you and tell you what to buy, what not to buy, how to use your credit card. Because in using your credit card, you always want to not use more, you don't want to use more than 20% of the credit limit in any given period. So, and that's I know it's low, but that's a great way to save. And that's a great way to save. Yes, it is. And then there's also a great way to build your credit. So if you had a credit card with a limit of $1,000, you don't want to spend more than $200 on that card for every billing cycle. And when you spend $200, the next billing cycle you want to pay that $200 off. Then you spend $200 more, the next billing cycle you want to pay that $200 off, right? If you keep doing that, that will help you to build your credit tremendously, right? One credit card, just keep your spending ratio at 20%. Don't go over 20% and pay it every month. So every month, so you could use it maybe for grocery shopping or whatever you do all the time anyway, use it to pay for that. And then the following month when the bill comes in, you pay that off. That will help you to build your credit. That's a good way to use a credit card. They also have the prepaid cards, but even with the prepaid cards, I would say do the same thing. If you buy a prepaid card for $200, then 20% of that is $40. Spend $40 and it maybe buy gas, and then next month you pay it off, right? Because what they're trying to do is they're trying to see what your credit responsibility is, and if you use credit, they want to make sure you could pay the credit off. The more you pay the credit, the more you use credit and pay it all off, the more it's going to build your score, right? So that's, you just want to always leave a 20% balance. You don't want to go more than that, especially if you're trying to build your credit fast, right? You just make that sacrifice. Everything that we do in life is a sacrifice, right? Anything that we want is a sacrifice. We got to save to be a first-time home buyer. We buy our first home, then we live in it for a few years, and we save to buy our second home or an investment property or whatever it is. It takes time. So as long as you take the time and make the sacrifice, you're able to do it. We help a lot of first-time home buyers out tremendously. Some of them start off with rent with option to buy, then they finally buy. Some of them just start out right buying. A lot of times they come, and a lot of time you don't realize that you could literally own a home. You think it takes thousands and thousands of dollars, and the mortgage is going to be so sky high, and it's not at all. We offer complimentary consultations through Zoom because we have COVID going on now. So we could set up any appointment for you through Zoom. We'll do a one-on-one just like this on Zoom. You tell us what you want, what you're looking for, where you're at, how much you're paying for rent, all that great stuff. And we go over all that stuff with you and see where you are. Maybe you're ready, maybe you're not ready. Maybe you'll be ready in 2 years, but we'll be here to help you every step of the way. And I do encourage you to come over here on our website and check out Central Florida Real Estate.info. I'm going to be on Facebook every Tuesday for buyers and every Thursday for sellers. It's going to be at 7 p.m. We're going to do a regular Zoom meeting and just record it. And we also send this recording out to all of our clients, our customers, our guests. I prefer to do it this way so there's not too many questions coming in, so that way I could focus on what I'm telling you. Now, after watching the video, if you have any questions, feel free to send me a text at 407-791-4713, or send me an email, or put something at the bottom of. If you're doing it through Facebook, just send me an instant message. If you're watching it through YouTube, my information is going to be on the bottom of the video, so you could send me that. Also, I would love for you guys to like my Facebook page and click on the notification button so you'll know every time that we have a live, you'll be notified. And our live are always very informational. I don't do videos to sell a house, because the house sells itself. I do videos to educate you in any real estate realm. I've been doing real estate for a long time. I'm also an investor. I became a real estate investor in 1996, and I got my real estate license in 2001. 9/11, that same year. So I've been doing this for a long time. I'm licensed in Florida and also in New York. I have a broker's license in both areas. So I'm very familiar with the investment side of real estate, the buying side. I was a first-time home buyer at one point in time, many, many moons ago, but I was, and I could teach you how to do that every step of the way. So definitely appreciate you taking the time for listening to me. I don't want to make this video too long, so I'm going to wrap it up. But I definitely appreciate you taking the time out.